General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.
Hi, everyone. My name's Finn Judell. I'm your host of the Global Alpha podcast. I'm with your co-host, Richard Nader. We're going to jump straight into some earnings. What do you think, Nader? What do we think about last week's earnings report on Palantir, AMD, Google, and Amazon?
So yeah, some of our high conviction picks that had earnings last week, I think if we saw it in a regular week, we would have seen quite a bit of a bull market on some of these stocks with the earnings that they posted. But because of sort of concerns around capex and the macro events that are happening, we're seeing a change of Fed chair in the States and things like that.
Yep.
We saw a bit of downward pressure on the tech space, particularly with the AI trade coming under question. So all these stocks reported quite well, really strong results. But unfortunately, because the market was coming off as a whole, they didn't really get to have their run in the sun as they normally would do, in a sort of an unheld back market.
Yeah, absolutely. I think, overall, there's been a whole lot of more volatility than usual in the market. And we've seen the VIX spike dramatically, which kind of shows just a general uncertainty in the market. That kind of shows people spending more on hedging their bets, essentially.
Yep.
And with the new Fed chair, overall, there's something new in the market every week with Trump doing X, Y, Z. So that probably had something to do with it. But if we kind of look at the S&P 500 over the last year or so, we've had a pretty volatile period. Even particularly, when you look at the April forward, it's kind of nothing. But even particularly in the last couple of months, we've just kind of been ranging around this period, around 6.5 to 7K on the S&P. And what I find really interesting is, when we have a little bit of a run down, and then it just the run up is quite aggressive, and especially last week. We had maybe 4 days of downward movement, and then just one tick up. It's quite aggressive, and I think the main reason for that is it is partially AI capex. We're trying to figure out if we're going to head into a fourth industrial revolution, but then people are always also trying to kind of hedge their bets. What if we're not, right? What are your thoughts on that, Nader, in terms of AI and the kind of impacts of what that means for markets and society? Are you quite positive on that?
I'm fairly positive. Like, we've seen the start of it we'll probably call it since sort of 2020 on this AI trade as a whole. I think it's still got a long way to run. There's a lot of businesses that are looking that, there's business that are questioning their numbers of staff and things like that. So, the bottom line for those businesses will be quite good. Not so good for workers, but, those businesses' profitability that are adapting to the AI trades or the AI theme will be quite positive. So I think it's about, the trade isn't going anywhere. I don't think the theme's going anywhere. It's just sort of the horizon has maybe been blown out a little bit in terms of that time frame.
Yeah, absolutely. I think, people get quite antsy, but the matter is, it was always going to be expensive, this AI strategy. And I think in a lot of ways we are proving that AI is here to stay. Even the people that I know that maybe don't like AI for ethical reasons, or maybe they don't like it for environmental reasons. Even them, to speak as a whole, that they still use it.
Yeah, there's a lot of adoption. I've seen it, with people that are not tech savvy, very happy to pick it up and, use it as an alternative for themselves. So I don't think it's going anywhere anytime soon. And I do think it has a lot of, groundbreaking potential. It's just that spend that they're doing. But as, we all know, you got to spend money to make money. So at the end of the day,
it's a massive societal shift that we're going through. So it's understandable that there is some anxiety in the air. But I thought it'd be worth kind of looking at some historical PE ratios and kind of seeing where we fit. To give you an idea, so price to earnings ratio, how much is an overall company worth, and how much are they earning, what's the ratio between that, and that's what we're looking at here. And this is on the S&P 500, so the top 500 US stocks.
Yep.
And we're seeing, in terms of historical kind of valuations, we are on the upside. But if we look at context, the potential implications of AI could amount to a shift that is similar to industrial revolution. So obviously, when we're looking at a higher PE ratio, we're anticipating earnings to grow. So we're essentially pricing that in.
Yep.
And if we look at, for example, the dot-com bubble, obviously the ratios were quite high at the peak of that bubble.
Yep.
And we were pricing in essentially a big shift. And that was actually the third industrial revolution. And you can see that the drop in PE ratios, it's actually a good thing. And in this case, it was a bit of a mix of overvaluation, but also increased revenues as a result of that.
Yep.
So we grew into that revenue. PE ratios dropped. Obviously, in the global financial crisis, that's a bit of a blip. That was purely just because corporate earnings had dropped. It was a global financial crisis. And similar to COVID, we also had the earnings drop. And as a result, lots of inflation to kind of keep the economy held up. And then recently, when Trump said the word tariff, this is an interesting one because the economy didn't change, but prices became cheaper. So that was an interesting kind of indicator to look at in that period. Prices became quite good. And then we're just kind of coming out of that period now. So
when you say prices, you're referring to PE ratios on these stocks.
Yep. That's right. PE ratios became quite, I suppose, attractive for investors. But if you weren't looking at this chart, you would have been quite scared. So it's a good kind of indicator to look at, but it kind of puts us into place of where we are now. We are pricing in future growth, which means that PE ratios are a bit higher. But personally, I do actually anticipate that we will grow into those, grow into this kind of current ratio. It might take time and it might take more investment. So be prepared for that kind of rocky market. And our overall strategy going forward is buy the dips. When there's a dip, buy it, because these kind of AI capex scares, while they are warranted, our thesis is that prices, our thesis is that overall it will cost money, but it will be worth it in the long run.
Absolutely.
Personally, I mean, I use AI so much. And there's you can't overuse it, but it's just such a fantastic tool. And I think that the long-term prospects are very promising.
Yeah, I think also not even in our industry, like just globally and in Australia wide, people are using it more and more in their day-to-day lives within their businesses and things like that. So the adoption is there. It's just how long till the monetization comes from that. Absolutely, and even taking AI out of the equation or looking at other industries. A lot of developments in quantum, a lot of developments in cybersecurity. There's a lot of things to be excited about, and technological advancement is just at an all-time high. It's growing exponentially. So these valuations being priced in the way that they are, I think it's justified. But it's going to be a pretty rocky ride. Obviously, there's a lot of geopolitical factors we've got to consider. So, hold your horses, but definitely good to be strapped in for the ride, and having some allocation to global markets is something we definitely recommend. Absolutely. Great. That pretty much closes it out for this week on the Global Alpha podcast. If you do want clarity in investing, if you want to understand markets more in a deeper way, I would recommend downloading Mosaic and getting a 30-day free trial. So there'll be a link in the bio for that. Thanks, everyone, and see you next week. Take care. Bye.